So you're hearing a lot about the ever-changing interest rates. How will this affect your buying power? That's today's topic. Hi, I'm Michelle Carolla, realtor here in Madison, Wisconsin with the Sprinkman Real Estate Group. And today I am joined by mortgage expert Ryan Brown with Fairway Mortgage, also here in Madison. We are talking a lot about interest rates right now, aren't we?
We certainly are. Thank you so much for having me, Michelle.
Of course. I mean, it's a big topic. It gets people into homes and it keeps them out of homes. So it's a critical topic, right?
That's certainly right. And there's been a lot of changes recently. We've seen a drastic change from just a year ago. Interest rates have doubled in the last year. But they're still certainly lower than the 30-year average. It does take a lot of thinking to get people into homes these days and sort of being strategic about how we get those loans.
Well, that's true. It's all about the strategy. And that's, of course, working with a good loan officer that knows the products out there, knows how to get people into different products based on what their financial situation is, what their credit situation is, what price home they want to get in, and, of course, where they're living. And throughout the Midwest, we're seeing so many properties increase in value, just like in a lot of other places, right?
Absolutely. And, this small dip in becoming more of a seller's market has really helped buyers in certain ways. A year ago, it would be unheard of to get a seller concession, where today it might be something you would be able to do in order to buy your rate down.
That's a good point, yeah.
So even though rates have increased and competition is a little less, it's actually sometimes working out good for buyers. They're able to ask for more when it comes time to buy their home.
So now if someone is looking at the interest rates and they're seeing in the news all the time that, okay, there's another uptick, there's another uptick, there's another uptick. So can I still get into a home? How will that actually affect their buying power? Like, if someone wants into maybe a $300,000 home and their interest rate was going to be around 3%, now that it's not, what will that happen? What will that do to their buying power?
Yeah, absolutely. So in Dane County, in July of this year, the average purchase price was $393,500. So at 3%, a mortgage rate is going to be about $1,300. So that would have been a year ago. Today, rates are just over 6%. Which puts your mortgage closer to this, $1,600, $1,700 range. So you're talking a difference of $500 per month. So in order to sort of make up for that in your debt to income equation, what we're seeing a lot of buyers do is either pay off external debt like car loans, auto loans, student loans, ask sellers for concessions in order to buy the rate down to get that lower monthly payment in order to qualify. Or a lot of what we're doing is having people that we're going to use funds for down payment sort of shift that to pay off debt and then add private mortgage insurance to their home loan. So it's still very possible. We just sort of have to shift things around, take a look at the entire picture in order to get people into the best product for them.
Yeah, and that's the key right there. So don't get discouraged if you're seeing these rates go up and you think, oh, I could barely get into a home when it was at 3%, but now it's not. That's when you actually work with your loan officer, work with your realtor, and try to see what's available to you. And like you said, if it's maybe paying down a car loan, or if you have 2 credit cards out there that if you just paid those off, it completely flips you into a different level, then that's an easy fix for a lot of people, right?
Absolutely, it certainly is, and I do think this is it's a great time to get into the market because competition is lower, but then demand is going to increase. When rates come back down, demand is going to increase again. So right now you're going against less offers, you're competing with less people, so it's a great time to get into the market.
It is. So, when people are thinking about mortgages, just in general, sometimes that can be a little scary. If you're a first-time home buyer or you haven't bought in 20, 30 years and you've not even applied for a mortgage in decades, things have changed a little bit, right?
They certainly have. We do so much with technology now. It's a lot different than 30 years ago. It's even different than a year ago. Things change all the time in mortgages, and we try to adapt and stay up with what's the latest and greatest. So
yeah, and make it easy for everyone.
Oh, absolutely.
Right? It
absolutely.
doesn't have to be scary, does it?
No, not at all. We try our best not to be scary.
And sometimes numbers can be, and especially when you're sitting in an apartment and you think, gosh, I hear all the time that my mortgage would be less than my rent.
Absolutely.
And how can I make all of that happen? What are the costs involved? We'll have a video for you on that as well, so you can watch the next video for all the costs involved in owning and buying a home. But at the same time, you can sit down with people a few months prior,
Absolutely.
a year prior, right? And sort of set them up on a trail.
Absolutely. Yep. So typical pre-approval lasts for 6 months. So we sort of take things in 6-month increments. And then if you're your home search lasted longer than 6 months, we could certainly take a look at things and then set you up for the next 6 months.
And what if somebody's in a situation where they need credit repair? Can you help them for a few months to get them on, like, do this, do this, do this?
Absolutely, yep. So Fairway has an organization within Fairway. It's called Credit Tool, and that organization is designed specifically for that, to help people repair their credit in order to buy homes.
So you'll just, basically it's a hand-holding program,
Absolutely,
right?
absolutely.
Yeah.
We'll walk you through every step of the process and help you repair that credit in order to get you to qualification.
And that's really good too, because when you're sitting there thinking, I don't know how to even do that. What do I pay off? What do I pay off first? You can give them a plan that if they hit those steps over a period of time, when they're done, they're ready to buy a house.
Absolutely.
Right?
Yes, absolutely.
Yeah. Okay.
Yeah.
So any last minute advice you can give us? We're going to have you back on the channel a lot. But any last minute advice for this whole crazy rate thing right now?
I think don't be discouraged by that. The rates are higher than they were a year ago, but still certainly lower than the 30-year average, and lower than their peak, in 1981. But I touched on this briefly just a bit ago, but I do think demand and supply is something you really need to keep in mind over the next 6 months to 5 years. The biggest generation is millennials, and the biggest group of millennials is 27 to 32 years old. Mm-hmm. First-time home buyer average age across the United States is 34 years old. So we have this huge group of people that are entering first-time home buyer years, all at a time when demand is at historic lows. Over the last 30 years, average homes on market is 2.5 million. Right now, we're sitting at just over 1 million homes on market. So we have very few homes with a big group of people entering the market to buy for the first time. So I do think demand is just going to increase over the next few years. So
it absolutely
so
will.
Don't be discouraged is really my biggest piece of advice. Enter it, jump both feet in. If rates go down, we can refinance. But do not be scared by the current rates is my biggest piece of advice.
Exactly, because we don't know if they're going to go up even more, which they're expected to. So why not get in now when they're as low as they will be for now?
Absolutely.
Right? Okay. Well, we're going to continue to talk to Ryan throughout the next couple of months, and then whenever you want to come back and talk to us, right? We always want to learn more about loans and mortgages, and it's the dollars that get you into the house. So you really are that foundational piece to buying a house.
That is right. Absolutely.
All right, Ryan. Thanks so much.
Thanks,
and thank you
Michelle.
guys for joining us. I'm Michelle Carolla, realtor here in Madison, Wisconsin with Frequent Real Estate Group. Always here for your real estate needs. See you next time.